friends, welcome to my channel. So in this video I'm going to tell you a revision notes of Cbse class 12 macroeconomics chapter 2, that is national income accounts. So I'm going to give so in this video let us have some revision of this national income accounting chapter, and I will tell you how much marks the question may ask. Okay, first is first is important terminology. What are important terminologies in this chapter, national income accounting? In this chapter, what are the important terminologies you should know, and they may ask the terminologies for 1 or 2 marks. First one is goods. So goods in economy, goods are produced and resources that meet people needs and demands. A good can be goods can be a physical object or a man-made object, a service or a mix of three that can be command a market price. In this also 1 or 2 marks they may ask in what is goods, and types of goods. Types of goods also they may ask for 3 or 5 marks. Types of goods, first one is the consumption goods. Consumption goods are the items that are utilized directly to satisfy human demands. Consumption goods support the core goals of the economy, which is to sustain the consumption of the economy, and for the population how much the goods need, how much the resources they need. So these are not used in manufacturing of other goods. So consumption goods is not used for manufacturing of other goods, and consumption products, often known as final goods, are intended for final consumption. Means consumption products, it is known as final goods. It is not known as semi-finished goods. It is a final goods. So it is used for the use. People use it. I mean, in these consumption goods, it is a final goods. It is not a semi-finished goods. You have a still process. After that only it will become finished goods or final goods. It is already a final goods, so it goes directly to the people, and people use the goods or the things that people buy, right? Next, for example, let us take television, pen, paper. These are finished goods. People use it. People watch TV for the TV. Pen, write, or paper, pair of shoes to put and walk. So it is a finished goods. Okay, in this consumption goods. Next is capital goods. They are the goods used by one business to assist another in the production of consumption of goods. So capital goods, it helps to used by one business to assist another business production of a consumption goods. So capital goods, it can be not easily transformed into cash. Capital goods cannot be easily transformed into cash. They are long lasting and do not degrade easily. And equipments, machineries, buildings, computers, these comes under capital goods. Next is final goods. So final goods are the commodities produced by a corporation for subsequent consumption by the consumer. So these commodities satisfy a consumer's demand or desires. So what are the demand of the consumer they have, or the desires? It satisfies these final goods. Next is intermediate goods. They are the goods that are utilized in the production of finished goods or consumers goods. They are utilized for the production of finished goods or the consumer goods. For them, these intermediate goods are utilized. They can also be considered as the part or input of some other commodities, and to comprise the final goods as ingredient. So these are the types of goods. So they may ask for 5 marks or write types of goods and explain. They may ask for 1 or 2 marks by telling explain consumption goods or capital goods, what is capital goods, or final goods or intermediate goods they may ask. Next is investment. So an investment is an asset or object purchased with the intention of earning money or increasing the value. It is used for earning money or increasing the value. Investment is that. When a person buys a goods as an investment, if he buys a product as an investment, the intention is not to consume the goods but rather to use it to build wealth in the future. So he takes a person, let us take it's a goods, he buys for a money or for investment. His intention will not be to consume that goods, it may be to helpful build a wealth in the future. Okay, gross investment. Next is gross investment. This is also one or two marks to be asked. Gross investment, a company capital investment before depreciation. Before depreciation, what is the investment company has done? It is referred to as its gross investment or gross capital investment. The absolute investment value made by a company in purchasing assets each year is shown by gross investment. Okay, next is net investment. So it is defined as the gross investment minus depreciation on existing capital. So net investment is, in a nutshell, is the increase in productive stock. So net investment is equal to gross investment minus depreciation is the formula for net investment. So this is also one mark they may ask. Okay, next is depreciation. Depreciation in economic terms, it is a way of dividing the cost of a tangible or physical assets over its usable life or life expectancy. So depreciation is a measurement of how much of the value of an asset has been diminished. Okay, next is capital information. Capital information, it is the process of gradually increasing the stock of a capital over time. Over time, increasing the stock of a capital is the capital information. Next is factor cost. So these are the earnings obtained by the owner of factors of production in exchange of providing factor services to the producer. It is the factor cost, is also one mark they may ask. Next is basic price. So the basic price, it is the amount a producer receives from a purchaser for a unit of a thing or service provided as output, less any tax due and any subsidy due on that unit as a result of its production or the sales it happens. So basic price is equal to factor cost plus production taxes minus production subsidy is known as the basic price. So this is also one or two marks they can ask. Next is market prices. So it is the price of a commodity and is the price at which it is sold on the open in the market. At that price the commodity is sold. It comprises the cost of production such as wages, rent, interest, input, prices, profit and so on. So it comprises, it also includes government imposed levies, government provided producer subsidies, these things it have. So market price, how we can find is market price is equal to basic price plus product taxes minus product subsidy. Okay, so this is about market price. This is also one or two marks they can ask. Next is transfer payment. So there is also 2 marks they can ask. Transfer payments. Transfer payment refer to payment received without the provision of any services or goods in exchange. Without provision of any goods or services in exchange. These are one-time payment with no expectation of a return. So these are one-time payment. There is no expectation of return, and these are given to you for free with no need to make any current or future payments in exchange. In exchange, you have to not pay any money, whether it may be now or future. And transfer payment or essential government welfare expenditure. So these are the essential government welfare expenditure. Okay. Next is stock variable. So there is also 2 marks. Stock variable is a variable that is measured at a certain point in time. It is a variable that is measured at a certain point in a time. Stock does not have a temporal dimension. It influences the flow and wealth, capital, etc. These comes under stock variable. Next is flow variable. It is the quantity that is measured over a specific time frame. Flows are thus it is described in the terms of given period such as like hours, day, months, years. So it has some time dimension. It has some time limit, time dimension. Next is leakage. So it is the context of a circular flow of income model. Leakage is an economic term that characterizes capital or money that escapes an economy or system. So it lowers the aggregate demand and income level. For like example, taxes, savings and imports. These are the examples for it. Okay. So this also 2 mark question. Next is injection. Injection when funds are added to an economy from source other than people and enterprises. This is referred to as an injection. So it raises aggregate demand as well as income level. So injection can come from a variety of sources including government spendings and investment, exports. From this the injection may come. Next, one more questions like consumer price index CPI. It reflects variation in the overall levels of prices of products and services that are referred as population obtains, consumes or pays for consumption across a time. These are the things. Next is whole price index. Whole price index WPI. It is an indicator that monitors and tracks changes in the price of products before they reach the retail level. Before they reach the level, there will be change in the price or product. This is the WPI, wholesale price index. Next is the circular flow of income. So the continual flow of commodities and services, revenue and expenditure in an economy is referred to as a circular flow. It is known as circular flow. Okay, this also it is also 1 mark question or 2 marks also they can ask. If they ask like this, you have to draw it. Depicts the circular redistribution of revenue. Manufacturing unit and household legacy. Firm and household. From firm to household, the goods and services it comes, and from household they give money spendings they do. From firm, factor payments they will give to household. From factor household, factor services will come like this. So economic territory. Economic territory. The geographical territory managed by government constitutes a country's economic territory. People, goods and capital may freely circulate inside this economic territory, these zones. The economic territory encompasses not just land but also national airspace territory like waterways, natural oils, gas resources in international waters also they get said. Next is what are scope of economic territory. These also 2 marks they can ask. Scope of economic territory. So territory, so territorial seas and airspace are examples of political boundaries. Residents, ships and aircraft that travel between 2 or more countries, and embassies, consulates, military bases and other international institutions, and residents operating fishing vessels, oils and gas rigs in foreign waters. These are the scope of economic territory. 2 marks they can ask. Next, what is normal resident of a country? They may ask. A person or an entity that regularly dwells in a country and has its center of economic interest in that country is referred to as normal residents of a country. Exceptions for normal resident of a country, they are diplomats and embassies officials from other countries, people who work for international organizations such as WHO, World Health Organization, International Water Fund, UNESCO, United Nations Education UNESCO and other are treated as a normal citizens of the country to which they belong. Commercial travelers, tourists, students, and so on, they are the exceptions for normal residential of a country. These people are they have rights, no problem. Next is the aggregates of national income. Aggregates of national income is gross domestic product at market price, GDP AB, that is gross domestic product at market price. It is the market value of all final products and services generated by all manufacturing units located on a country's domestic territory within an accounting year. So gross domestic products at market price equals the sum of the all resident producers gross values added at the market prices plus taxes and fewer import subsidies. Like gross domestic product at market prices is equal to net domestic product at factor cost NDPFC plus depreciation plus net indirect tax, or you can write it as GDP is equal to C plus I plus G plus X minus M. Okay. Second type is gross domestic product at factor cost, GDPFC. So it is the total worth of all final goods and services produced within a country's domestic territory, excluding net indirect taxation. So GDPFC is equal to GDP minus indirect tax plus subsidy, or GDPFC is equal to GDP minus NIT, indirect tax, or you can take it as GDPFC is equal to compensation of employees plus rent plus interest plus profit plus depreciation. Next third one is net domestic product at market price, NDPMP.